What if you had your own personal AI stock analyst? You know, one you could actually teach, build a relationship with, and then send it off to find the next great investment. Sounds like something out of a movie, right? Well, one investor is already doing it.
That right there is investor Kerry Grinkmeyer. And get this, he didn't just use some off-the-shelf AI. Nope, he created two distinct AI personalities. Bart, who's the deep dive researcher, and Samantha, the sharp-as-a-tack stock analyst. His whole goal was to teach them exactly what he looks for in a great growth company.
And this whole experiment, it really makes you wonder, doesn't it? Could a personalized AI, one that truly learns your specific style, one that gets what you're looking for, could that become your most trusted financial partner?
The way he did it was kind of simple, but totally brilliant. Kerry fed his AIs a ton of historical data on what today's giants, we're talking NVIDIA, Apple, Google, what they look like way back in their early days. He was basically teaching them to recognize the DNA of greatness. And then he gave them their first huge assignment. He didn't start them off with some small, obscure company either. He aimed his new AI firepower at one of the biggest, most complicated companies on the planet, Microsoft.
The mission was crystal clear. Samantha, you are now the lead equity analyst. Your job? Give me a full, comprehensive report on Microsoft. I want its financial health, its growth prospects, and a final verdict. So let's see what she came up with.
Okay, so Samantha kicked things off with something simple but incredibly powerful, a financial report card. No confusing jargon, no 1,000-page document, just straight-up grades on the company's health.
And wow, the results are pretty stunning. We're looking at straight A's right across the board. This isn't just a good score. It's a picture of a company in ridiculously good financial shape. A's in profitability and efficiency, that means it's a master at turning sales into actual profit. An A in liquidity, it's swimming in cash. But that A+ in solvency, well, that points to something truly elite.
Here's where that A+ comes from. It's an incredible fact. Microsoft is one of only two, that's right, two U.S. companies with a perfect AAA credit rating. That's the highest stamp of financial security you can possibly get. It signals that the risk of them defaulting is almost zero. A huge strength that Samantha flagged right away.
Okay, so we know it's rock solid financially. But let's be real. For a company with a market cap in the trillions, the big question is always, where on earth does the growth come from? How can a giant this big keep getting bigger?
To figure that out, Samantha used a special metric she was taught called Kerry's Rule of 40. It's a really quick and dirty benchmark for tech companies. It's simple. You just add the company's revenue growth percentage to its earnings per share, or EPS, growth percentage. If that number is over 40, you're looking at a potential hyper-growth company.
So, what was Microsoft's score? It came in at around 24. Now, that's solid, for sure, but it's not even close to that hyper-growth benchmark of 40. And this is a fantastic insight from our AI analyst. It tells us that Microsoft's incredible performance isn't just coming from explosive growth. So, what is its secret sauce?
Answering that question? Well, that's what separates a truly great analyst from just a calculator. And Samantha didn't just stop at the number. She dug deeper to find the why.
And the answer is just mind-blowing profitability. Microsoft's net profit margin is a staggering 36%. Now, to put that into perspective, look at its mega-cap peers. Apple is around 25%, and Google's at about 21%. Microsoft isn't just winning here, it's playing a completely different sport when it comes to turning revenue into pure profit. It's an absolute efficiency machine.
And when she looked to the future, Samantha pinpointed three massive growth engines. First, you've got cloud computing, where its Azure platform is actually growing faster than Amazon's AWS. Second, artificial intelligence, with that deep integration of OpenAI's tech. And third, gaming, which just got supercharged by that massive acquisition of Activision Blizzard.
So how does this all add up? What's the bottom line? Samantha took all this data, the financial strength, the insane profitability, the future growth drivers, and she synthesized it all into her final verdict and forecast.
She projected 3 potential price targets for early 2028. Now, from a starting point of about $400, her conservative case is $600.
The moderate or most likely scenario is 770, and in an aggressive, best-case scenario world, she projects a target of $950. That's more than double its price.
All of this analysis, every number, every factor, it all boils down to a single score. Samantha's final investment score for Microsoft is an 87 out of 100. And in the system she was taught to use, that is a very clear, strong buy.
And you know, that 87 wasn't just a gut feeling. It's a composite score, and you can see here how it's built. It comes from a weighted average of all these key factors. Things like financial strength and its competitive moat are weighted the heaviest, which shows just how important they are in her analysis. This whole thing demonstrates a really sophisticated, multifaceted approach. It's not just looking at one thing.
So after weighing all the evidence, our AI analyst delivered her clear, confident recommendation. To put it in her own words, Samantha's view is that Microsoft is a buy for anyone who's looking for strong, sustainable returns in tech.
You know, this whole case study just leaves us with one final provocative thought. If one person working from their home office can create a personal AI analyst that's this powerful, what does that mean for the future of investing for all of us? It really feels like we're standing at the very beginning of a massive transformation.